Hey guys, welcome to the lockdown edition of the Friday Wrap. All right, last week I was like, hey guys, it's the end of the financial year. For me, I use the end of the financial year, the end of the calendar year as a time to reset, look at my goals. What do I want to achieve? What have I done right? What have I done wrong? What can I do better? All that sort of thing. During the week, I'm driving around and I'm like, it's one thing to tell people, hey, use this time wisely, but it's another thing to actually help them to do that. So this week for our Friday Wrap, I've got a few examples for you, some help, if you like. As I said, it's a good time of the year to do some stuff. So let's have a look at 5 different areas where we can give you some assistance. You can do some things to make yourself better for it. Wealth creation. You've seen me do it enough now. Wave my arm around. It doesn't matter where you are. What matters is the trajectory that you are on. It's the actions that you're taking, either good or bad, that increase or decrease the trajectory. Every day, we're right here on day one. Every day is day one. And it's whatever you do on day one that makes an impact all the way along the way. So allocate some money to a pay yourself first strategy. What does that mean? It means don't spend all your money like most people do. And when you've got a little bit of money to the side, it might be $20 a week, it might be $20 a month. Doesn't matter. What matters is the actual action, not how much. Whatever it is you've got, put it away into somewhere that's better than the bank, because the bank gives you nothing. And the next slide, I'm going to bash the banks a bit more. Put it away somewhere into a good investment, a liquid investment. So a managed fund outside of super. Habits, automation, discipline is what's going to help you along the way here. But set up a strategy where you invest some money for the long term, do it regularly, and watch what happens when your identity changes. I won't bang on too much about this, but what I mean by that is in a year's time where you've done it for 12 months straight and you've got more money in this investment than you have anywhere else, and you're like, wow, I want this to grow more because I'm excited about it. Watch what happens then. Debt reduction. The big 4 banks made $15 billion in net profit from September 2020 to March 2021. They are doing well enough without your help. So in relation to your debts, make sure you're not paying too much interest. Make sure you're using strategies to pay your debt off as soon as possible. The banks don't need your help. On the last slide, I said you don't want to invest money in the bank because they give you about this much in repayments or interest on your money these days. Let's not help the banks any more than we need to. We are about you and looking after you. So review your loans. Make sure your interest rates are as low as possible. I'm refinancing my home loan at the moment and it starts with a 1. Yeah, I'm going to fix my loans with a 1. Your super. Make sure your money is invested appropriately. I can't tell. We do research, let's say on a monthly basis, maybe 50 different super funds for clients every month. The amount of people where I get the research and they're not invested properly, which doesn't matter in the now for today, but for the long-term future, it makes a massive difference. If you're invested in a balanced manner and you're 30 or 40 years old and you should be in a growth-oriented investment portfolio, that difference in earnings over those 2 decades or whatever it is going to be tens of, if not hundreds of thousands of dollars. Ring your super fund. Some questions that we ask. How much do you have? How is it invested? What are the fees? Do I have insurance? How much does it cost? Make sure what you've got is looking after you. You need to be selfish in all of these areas. In your cash flow, everyone spends all their money. How do we get out of that habit? Well, we can just grab some money the day after we get paid and then you go and spend all your money. Or you can actually create a budget and look at what you're spending your money on. That's probably not a bad idea. I'm as bad as anybody, where you go to the shops and you grab things you don't need, impulse buys, all that sort of stuff. So exercise some discipline. There's online budgeting tools. I haven't got a good one that I could share with you. If I did, I would. But just do a budget. See where your money goes. Review it over the course of the next month. See where your spending is. And your insurance. Can't afford to have it. Can't afford not to have it. Most people are underinsured. And I always say, everyone's happy to insure the egg, but nobody wants to insure the goose. What do I mean by that? I'll give you an example. I have a client, 30-year-old guy, earns 150 grand a year, income protection to insure his income till age 65. Costs him $1,000 a year. And he's like, I don't know, do I need it, do I not need it? I go, mate, what sort of car do you drive? He goes, Prado. I said, how much does the insurance cost a year? He goes, $1,000. So what's your Prado worth? He goes, 60 grand. So I go, is it insured? He goes, yeah, $1,000. Just told you that. So he's happy to spend $1,000 a year to insure his $60,000 Prado, but he's questioning, does he need to spend $1,000 a year to insure his $150,000 income till age 65, which is like $4.5 million worth of time. He's the goose, happy to insure the egg, questioning whether he insures the goose. We've got to ask about. So look at your insurance. You might be overinsured. We get instances where people are overinsured. Check it out. So there you go. 5 instances where you can take some action and see if what you're doing is going to put you on a better trajectory. We're always on day 1. We just want to increase the trajectory. All right, guys, lockdown edition. I think it was a pretty good one. All right, be good. See you next week.